So I wanted to start with the first question, which is about 7th of October events in Gaza. And we don't want to be too political here, but we just want to talk about the liquidity side of those tragic events and what happened on that day and the days after and what was expected and the impact on liquidity on that event. So Phil, if I can start with you.
Yeah, thank you. I mean, what we notice with any geopolitical tensions, they always lead to uncertainty in the markets. As a company, we saw market makers pricing defensively. We noticed spreads widening, particularly on commodities, particularly on gold as well. We noticed an uptick in volatility in comparison to the rest of the year.
So really like towards much more than the rest of the year, pretty much.
In comparison, yeah.
Okay. Okay, Andreas?
Yeah, without a doubt, it's very often that we have events like this during a financial year. Obviously, this one outshines the rest of it. We really hope that everything is finished very soon, because it's very unfortunate. Going to our industry, the specific event happened on the 7th, which was a Saturday. So that allowed the market a bit of time to react during the opening, which that kind of prepared the brokers. However, it is very common that when events like this do take place, market makers, banks, prop trading, they become a bit more defensive. So the liquidity tends to be a bit more, I would say, illiquid. They're being protective. So that allows a bit of arbitraging on some occasions, and then slowly reacts back to what it was. What is obvious though from this is that different approaches had different impact on what happened.
Yeah. So Alexei, was the Gaza thing was that the biggest event of the year in your opinion?
On a kind of, if we're talking about one day, it's a big isolated event. It's obviously a big spike, but it kind of subsided very quickly. I'm not going to say anything new if I say, like, obviously spreads were considerably wider on the open because there's a lot of uncertainty, and those events are typically quite emotional, and you watch all the news. But on the flip side, it was very like isolated event. If you just look at the macro side of things, like, okay, oil was considerably up over the weekend. It's classical, like Middle East, so like oil is affected to the top side, and local equities, obviously, in Israel are down considerably, but everything else wasn't really moved. It wasn't really like a classical like risk-off event where, like people are buying treasuries and all this stuff. It was pretty standard, like emerging market isolated event. So like it's probably a wrong thing to say from a purely emotional standpoint, but if you just look at the kind of like pure macroeconomic development, it was like very isolated macroeconomic event, nothing of a global significance.
Okay.
Purely from a market's perspective, obviously, not from political perspective.
Okay, Ben?
Well, October the 7th is a very poignant day for me. It happens to be my birthday.
Oh, wow, okay.
Which I share with Tom York from Radiohead.
Okay.
Vladimir
Great.
Putin.
Oh, okay, so you were
and sadly
celebrating.
Simon Cowell.
Okay.
Right. But the point I wanted to make was the one that you made there. The 7th was a Saturday. Right. So when we came to work on Monday, the currencies that we generally trade are G7, and they weren't too badly affected. Israeli shekel was off the cards that day for us. But the other point I wanted to make was that the 7th of October has traditionally been a very volatile day in some markets. And for some of you that remember 1998, there was a huge move in dollar-yen that day.
Was that on your birthday as well?
Yes,
wow,
it was,
okay.
yeah. And also on the 7th,
actually,
the 7th of October 2016, there was a flash crash in cable.
Yeah.
So the 7th of October is a date for people to look out for.
For your birthday. And also I've heard it's actually September, October are historically known as a little bit of a...
Yeah, well, in 2008, October was an extremely volatile month as well. And
yeah.
So you had two different events. Obviously, the Russian default in 98, in 2008, the global financial crisis, and then sadly, the last event was...
We'll never forget your birthday, that's for sure.
No, you won't. So it's on YouTube now.
Okay, so and it always happens on a Saturday, isn't it? These events. I see most of them are weekend stuff, right? Why is that? It's by chance, isn't it? Okay, so next question is about A book, B book, and the liquidity situation has made this whole story a bit interesting this year. A book, B book, when people take risk, the market's usually pretty straightforward with that stuff, A book, B book, but now, this year, should people B book? B book's been hurt a lot. There's nothing to hide here. I think everyone knows that B book's been a disaster. What's your thoughts on that, Phil?
Yeah, I mean, for me, internalisation comes down to the balance sheet and also the expertise on how to manage flow of the individual broker. I mean, if you've got a good team that's capable of assessing risk, then a hybrid model also works well. I mean, in my experience, I believe in sort of like hedging the risk to protect the underlying business. But also, what's equally as important is choosing the right LP to hedge with, really.
Yeah, in this environment. So, Andreas?
Well, I have a bit of a different perspective on this. It depends. It depends. You cannot say a book or a B book, it's better than the other. It depends what kind of flow you have. So, for example, let's take, for example, Asia and UAE, which are not hedging, they don't have diversified flow, and they have mostly gold and commodities. If they B booked, probably they didn't do that well, you're right, and then the A book solution would have been a better option. However, if you see the European markets, where they mostly trade FX and equities, then I would say that it wasn't that bad. So if you B book there, then it might be a successful strategy, let's say. However, what is important to say here is it's the fact that if we compare 2023 with 2022, obviously it's not the same results. We don't expect to have the results we have in 2022, where
even FX, right?
Even FX. So yeah, it depends how you penetrate the A book and B book, in my opinion, and that comes to the risk appetite and risk management of the company, and that's where you benefit the best from the two strategies out.
Okay, maybe you can tell us how we did, Alexei. You're more neutral.
This is more proprietary information, but I completely agree with Andreas. In the end of the day, this is how you manage your A book versus B book. There's no like one story fits all, right? Different people have different clients. I want to notice, like 2023, obviously everybody knows that volatilities are considerably lower than 2022, which means two things. Which means maybe market is a bit more directional, less uncertainty. Maybe retail gets it right from time to time, but it very much depends on your clients. If it is very directional and you're fully kind of into one or two or three assets, then obviously, you know, like you will be caught eventually, especially if those assets are strongly consensus. Because as you know, as one famous British economist said, you know, like markets can stay irrational longer than you can stay solvent, and that's pretty much a story of a B book, right? Even if you kind of manage the risk, eventually, if you have a couple of bad clients in there which potentially push your directionality, then eventually you will be forced to liquidate in the worst possible position that the market is about to turn. And this is what we observe a lot in our analytics. But ultimately, it's ability of the market to kind of, we talk about liquidity here, right? So ability of the market to offload risk. This was actually remarkably resilient in this respect. I remember being here 2 years ago. We've been talking about 2021, and the message is the same, right? The system is remarkably resilient, like what we had this year and what we observe in the market, how the moves, how the market absorbs the liquidity is actually remarkably resilient, given all the macroeconomic events. So, and liquidity and the volatility is actually quite low. Maybe it's contributing to the fact that people just trade directionally, and it's hard to, that's where your horror stories come, right? People trade directionally with you and you're unable to offload the risk.
Yeah, Ben?
Well, as an institutional broker, I prefer to see A book flow.
Yeah, you don't like B book, we know that.
Well, no, B book has its advantages, but I'd say in agreement with Phil there, I think balance sheet has a lot to do with it. I think the location of where the brokerage is domiciled has a lot to do with it. The client base has a lot to do with it, and economies of scale and leverage. All right, so if you've got a client base that's pointed at Vanuatu trading on 500 to 1 leverage on following an expert advisor that's trading every 5 minutes, then you want to B-book that. But if you've got a client base that's trading on lower leverage in, say, London, and I think last year dollar yen had a big one-way move, then that's the sort of flow that you probably want to offset. So it's horses for courses, and I think it's, everyone wants to have their focus in London because that's where it's the regulator of choice. But then there are these brokers that have these jurisdictions outside of London where they use the London license to say, well, we are legitimate, and then they have a client base that's trading somewhere with huge amounts of leverage.
And yeah, go ahead.
I was just going to add one more thing to what Alexei said, because he mentioned the risk management on everything, and I can contribute here what we experience. For example, because as a group we have some startup companies as well, brokers, which they haven't really implemented a good risk management team to do what needs to be done. And right after the 7th of October, when the markets open, you would see them wipe out because they didn't have anything in place. They were booking everything. So they ended up having operational survival problems. They would actually be wiped out, especially on the UAE and Asia. Whereas in Europe, obviously, as mentioned, it's more established, it's more in place, and that's high risk for brokers if they don't put it in place.
I mean, the only good news with less volatility is that, in theory, liquidity situations better this year than last year. Easier to get out of positions with a much tighter spreads, maybe. If there is less volatility, and this year should have, I don't know if you guys analyze average spreads or anything, this year should be better than last year then.
Yeah, spreads are definitely tighter this year. But when I'm talking about spreads, I'm not talking about the spreads that you see in aggregator. Those are always tight until you start pushing them. But the effective realized spreads are obviously smaller. The flip side of volatility, of low volatility, is that low volatility is smaller potential kind of P&L, so you have to trade bigger amounts. So that's the flip side. So you never actually win. So right. So if you have a low volatility, people start to trade more. They need to take bigger positions. Speaking purely like if you're talking about CTAs or that kind of people, they have to trade more. Otherwise, they don't make money. So volumes are higher. Demand for liquidity is higher. And the liquidity is good, demand for liquidity is higher. So it's still challenging.
Okay, and I just wanted to move to this thing you guys mentioned, gold. So gold was a big subject this year. I would have thought that's like, generally speaking, for the year, that's a bigger subject than anything else, right? And the way gold moved, the way gold hurt some of the risk books, the way it's been directional, the way it's been, perhaps everyone expects gold to go down when interest rates are going up, right? That's been the expectations generally in history, that when interest rates go up, it's better to have dollars and put them in the bank. Gold goes down, sell your gold, buy dollars. But it's been the opposite, and that's been hurting things. So I just wanted to touch that a little bit, see what your views are on gold. Maybe I start with you, Andreas, if you have some ideas on the gold. And
Okay, first of all, gold. The last 3 years, everyone was expecting gold to be much more higher than where it is now. So a lot of, especially in Asia again, where gold is being taken as a very as long. They tend to go long. I haven't seen the performance that I would expect. Maybe I'm wrong. Maybe that strategy will be successful at the end.
I agree with the 3 years. I've done these polls on LinkedIn, and everyone says we're going to go higher. Every time I do the poll, it's more higher from all of you by average.
Plus, don't forget, if I'm not mistaken, I don't remember, I can't recall when, but Credit Suisse pull out at some point. So again, you have more in liquid. That created what? A lot of abusing. If you remember, I think it was Alexei will remember. Probably it was April, end of April, where there's a high observance of gold abuse. I can't recall when it was.
True, yeah, it's true.
But
April,
that creates the opportunity for abusers to use it, and that's bad for B-bookers, obviously. Again.
Okay, Alexei.
Well, I have to add, gold is like, people talk about gold probably, well, it's not my favorite subject to be honest, but people talk about gold much more than they should
The biggest
talk about
subject.
gold.
It's not your favorite, but it's the biggest subject.
It's quite interesting subject, I guess, because people expect gold to always protect them from something, but it never protects them from pretty much anything, and that's just kind of that's something it shares with Bitcoin a bit. I guess I'll put it on stage. I think it's interesting. Hormuz mentioned the interest rates. Yes, if the real interest rate, not the nominal ones, but if the real interest rates, which is nominal adjusted for inflation, go up, that means gold should go down. It didn't go down this year, and maybe that kind of contributed a lot to the confusion. But people, I think, expected like a high inflation to continue. That's why they kind of kept on beating gold and not kind of completely ignoring the Fed. That's one story. Another story which is quite interesting, and this is probably the only kind of story which always consistent with gold, is that intraday it always goes down, and overnight it always goes up. And this keeps on going for many, many years. Nobody kind of like, I'm sure, I know some people who actually trade it as a strategy, like the same strategy that we trade in stocks. You can check, I have on my LinkedIn lots of stats on this as well, but that's kind of interesting. And that always happens, and even though people take advantage of it, the flows are so strong that people always sell gold from London morning to London evening, and people always buy gold in Asia overnight.
So wait, the last 3 years, this is a pretty simple strategy. I was going to call it dumb, but simple strategy where you sell gold in the morning, buy in the afternoon. That's all you do. Every morning you come in, you buy, you sell a little bit, buy it back, London hours. And that strategy would have made money over the last few years?
It would have made pretty good money, especially if you can short it. It would have made twice the return on gold buy and hold.
So the long one I would understand maybe because the market's gone up. But even the short one would have worked?
Yes.
Wow. Should we do it,
Yes.
Ben?
It's
No.
free advice. Free advice. Take it or leave it. Free advice is worth what it's.
Great
It's
strategy.
price.
Yeah. Ben, anything to add on the gold there?
Yeah, absolutely. So you need. I have a friend who runs a gold fund, and he's a trend follower. So he's tends to be agnostic on the movement of gold. But I think probably what we should consider are the macro factors. So gold is a commodity, and commodities tend to be a leading indicator on inflation. And obviously, when interest rates go up, that's probably more negative for commodities. But there are other factors. There's something called the global factor, that commodities are correlated. So if there's a movement in other commodities, then that tends to be beneficial for a whole set of commodities. Then you have the China factor. So that's obviously gone quite well over the weekend with Biden and Xi. So you've had a slight positive movement in commodities and gold. You can see that today. There's the potential of a super cycle.
Yeah, I know you mentioned super cycles before. Yeah. So you mean part of the super cycle, gold can have a move up despite the fact that interest rates are going up? Doesn't matter. The super cycle is more important.
Last week we had the inflation reports, which were more beneficial for a view that there's a softer landing, so that's probably positive for commodities too. But the general theme over the last 2 or 3 years, especially, is that you had this inflation, and that's actually been good for commodities. All right, so now we have de-inflation, lower interest rates. That's also going to be positive for commodities because as growth will come out into play again. So I think that gold is an interesting commodity. I would have a small amount of gold in a portfolio, but it's not something that I'd wager my house on.
I think I wasn't going to ask such a question, but we might as well. I might as well ask you guys where you think gold's going to be in a year. I know that's not a fair thing to ask, but in a year from now, maybe next year, what do you guys think? Gold's going to be higher or lower than, let's say, whatever, 2000?
Well, I mean, I personally think that it's going to be higher than it is currently, given obviously the state of the geopolitical tension at the moment.
Okay, higher.
Also, yeah, based on geopolitical tensions, I would say I expect it to trend the same. I don't see a significant change in the following year as well.
be honest, I was going to say higher, but then I remembered that Hormuz said every time he did a poll,
Everybody
and
says higher.
everybody said higher, it actually didn't go higher.
So you're gonna go
I think
lower.
It's going to go lower.
Okay, I'm going to start selling in the evenings. Was it? Evenings sell, buy in the mornings. Or was it the other way around? Okay, I need to check that. Okay.
I think it's going to remain in some kind of a range, so 1800, 2200, but I don't see it a significant breakout
okay.
either way.
Okay.
I won't go long. I'll do this strategy.
You're going to change that? Okay, so that's where gold is. So I just wanted to just shift to another subject, which is AI. We hear a lot about AI these days. It comes back. It's a little bit like cryptos. The subject keeps coming back now this year with the whole ChatGPT and OpenAI and all that. I want to know AI's impact on liquidity stuff. What do you guys see there? Is there an impact yet? Do you see it? You guys should probably, I don't know, maybe you guys, all of you, maybe see something in there with the AI already. Phil?
I mean, for me, AI has played a part in detecting anomalies and also potential liquidity issues. That's not really my realm, but I've definitely seen, obviously, an increase in usage.
Andreas?
Undoubtedly, AI obviously is the subject of the year. It's applicable everywhere, and it's no exemption with the liquidity as well. I mean, you have the biggest banks recruiting quant teams that they've been working on this. So you have, I think there is a direct correlation and direct impact on liquidity because since you have these teams working, you have more liquidity. But at the same time, you know, when something like this happens and then you have a liquid, you have the risk of AI creating abusive trading, and then you have the bots and all of that. But in general, I believe that AI, yes, will contribute in liquidity in a good sense because it will increase it. And obviously, more liquidity, the better.
Okay, Alexei? You're maybe the closest to this subject on the...
I don't know. I think AI is a kind of interesting subject as well because it very much depends, right? It can remove, and first of all, what we mean when we talk about AI. Then I talk about AI, I mainly mean machine learning. I don't talk about artificial general intelligence that Sam Altman kind of promises to us, but that is not here yet. I just mean machine learning, and in a pure interbank market, that's clearly a very good application of that, and people do a lot of that. On a liquidity consuming side, I'm a bit skeptical, right? It's more, I think AI has a lot of potential to just eliminate the inefficiencies because like client management, kind of better techniques so that you don't just have a human kind of saying, oh yeah, that guy looks like a B book and this like it looks like a book, and I have some random rules. I actually follow the data. This will improve quite a lot, and people will become a bit more, like markets will become a bit more kind of regular in a way. But it's similar analogy to like if machines were doing all the driving and humans were not doing any driving, then cities will probably become more efficient because nobody will be doing stupid things. Now we have a combination of the two, and humans are kind of trying to exploit what well-known AI dynamics is doing as well. So that's kind of happening. At the moment, we have a hybrid markets, lots of humans, lots of machines, and it's definitely getting more efficient. But on a pure liquidity consuming side, I think AI contribution is much more limited. And I think the best thing I did is like, you know, this chat when you log into a broker website and say, hello, they want to trade with us. I can open you an account. That's a big contribution.
That's the AI contribution to our industry. Well, Ben, AIs?
Like Alexei said, it's about machine learning.
Yeah.
Right. So once again, I have a friend who spent a great deal of time creating an artificial intelligence neural network machine learning system. Is that applicable across the board for people to make money? Well, he's applying it to his money management. And I'd say so far his results are slightly positive, but I don't think they could be described as any better or worse than a general trend follower. So I'm slightly skeptical about AI in its interpretation that it's a money winner for everybody, because with respect to currencies, if you buy a currency, by definition you sell another currency, so someone has to be on the sell side of that. So if we all switch to AI, and then who are the losers? Because everyone's winning, so someone ultimately has to be a loser. And the foreign exchange markets are two-way markets.
We'll have a losing AI and a winning AI, no? Okay. Anything to add on the AI side? I know I saw this week there was some issues with Microsoft AI's team. They were all worried about their jobs at OpenAI, which is quite ironic, isn't it? Everyone's worried about their jobs being taken by AI, but the AI developers are worried about their jobs at OpenAI this weekend.
They probably thought they were going to be the last ones, right?
Yeah, they were the first one to go. Yeah, so anything else to add on the AI before I move on to platforms and that kind of thing?
Well, more generic. I mean, if the discussion is about the AI and how it comes to our lives, well, without it, how it's the evolution, you know. So we need to adjust. To that, it's here. So I guess it's on us to adjust to that now.
Yeah, for sure. I mean, I see AI generally as it's almost like electricity year 1900. If you ask someone, has there been any impact? They'll be like, no, not much. But it's all ahead of us. For sure, the big impact's going to be ahead of us. It's here, but it's not with us yet. Okay, so on the platform side, MT4, MT5 dynamics. Andreas, what's your thoughts on that? The white labels. What's happening? I can't believe I'm mentioning MT4. It's like 30 years ago or 20 years ago they built it. But MT4?
Well, MT4, MT5, metacode, so without a doubt, it's a huge player in our industry. That's for sure, and will continue to be. But what happened in September with the white labels obviously changed a bit the dynamics, let's say, of technology, and that has a direct relation to the liquidity as well, because technology providers, I can use our name. I mean, for example, Match Trade Technologies, because we do a turnkey solution and we have the white labels now, whereas we had it before. Suddenly, we had a big wave coming to us with requests for white labels. And how does it affect liquidity? We offer it as a turnkey solution. So a startup, at the beginning, they might not consider to have a book solution in place because they didn't know of it or they wouldn't see for it, while having a white label from Metacode, because that's just technology. Whereas now they can start their business by having a book strategy in place. That allows them to take more time to understand how the industry works, see the positive and the negative, the risks that they might have, and that's very good. I mean, from our side, we've noticed that more startups are starting to use a book and have a longer lifespan, let's say, whereas the conversion rate of startups was very, very low. Now, because of that, we increased that percentage, and that's very good because we want to see the clients succeed at the end of the day. You know, it's in our benefit as well, reputational as well. So I believe it helped in general, like to intro liquidity into this. So white labels are there; they're being provided by several other technology providers, and new clients or even more established ones, they can actually utilize it in a more complete, let's say.
So MT4 retail broker startups, in your opinion, most of them in the liquidity space, they go initially for a B-book model only?
Definitely, it used to be like this, yes.
So they don't even know kind of how to A-book?
Some of them, they don't know. Some of them will think they'll make the easy money quickly. So that's the trap that most of them like.
So is it like 70% of them are like that, or something?
I can't speculate on the percentage.
But it's a huge percentage.
But it's huge. I mean, you would know as well from the UAE, and now a lot of Indian flow came in. They did startups. They take the risk, you know.
Because we see them, of course, hedge with us, so they know how to A-book. I mean, we know how they trade. But I don't see. You're in the technology space where you see them, you provide them something, and you see no flow coming out. So they're only doing a B-book model, which is quite crazy, quite shocking actually. But that they don't have a way to hedge risk.
You know what, Hormuz, you'll be surprised actually how many brokers they actually don't have the right people in place to advise them to do that. You'll be surprised. I'm not talking about Europe. But in Europe, you'll
Outside of
have
Europe.
that, yeah.
Ben, your blood must be boiling about this subject.
My blood's not boiling at all. But going back to the earlier point about liquidity,
Yeah.
there are some brokers that have such economies of scale and such tremendous marketing that they can run colossal B-books. And if volatility is less than it used to be, then if you look at the dynamics of their sort of value at risk, if those clients then tick off against each other, then they make the money. So there are brokers in this space, in this building today, that have massive amounts of flow but don't hedge very much at all.
I guess we'll know next year which ones don't pay for their booths, right? I think that we need to create an index for that, the price of big booths compared to B-book performance. Anyway, Alexei, anything else to add on the platform side? I know you guys are hooking up to all the platforms and liquidity side. Any views on the future in that?
Yeah, we look at the liquidity side, but we don't really look at like white label versus anything else. I was gonna add like this A book versus B book debate. In both scenarios is basically the contribution of the previous topic. Machine learning is extremely important because B book is obviously how you manage your clients, but scale is important. If you don't have scale, then just the smartest thing is not to do any B book. But at the same time, A book, you have to really manage your liquidity because otherwise your banks will be extremely unhappy. Because we work closely with like obviously liquidity providers as well, and we can see lots of confusions about, couple of clients in a stream completely destroy the look of the stream to the liquidity provider, and then liquidity provider complains, and these are the situations that can be easily avoided. And it's 2023 already, and we talk about the same topic pretty much for the last 10 years, I guess, right?
I mean, yeah, your business model is to analyze essentially toxic flow and standardize that industry of how to measure toxic flow and make it easier, the communication between liquidity providers, banks, and clients, right? So
exactly, it's communication which is super important. Communication and easy access to the data, because I think the problem in the industry is that if I'm a broker, especially if I'm not a big broker, but even if I'm a big broker, right, I can calculate some stats, I can go to my LPs, and the best reply I will get is like, I'm too busy, I have other things to worry about, and I have my own stats, by the way, and I'm not going to explain them to you because I don't know how they calculated, but my stats tell you that your flow is not good.
Yeah, Phil, before we go to Q&As, maybe from the audience, anything to add on?
I mean, to be honest, I think Andreas put it quite well. Obviously, with meta quotes and the white label suspension, I mean, MT4, MT5 obviously got a massive dominance on the market, so that's had an effect. But we've also noticed that a lot of clients are looking for alternative platforms and technology options. I mean, that's what I've sort of seen from it.
And we haven't even mentioned the demand on prop trading now as well. So a lot of clients are looking for technology for their business, which is something new, and it's another subject.
Yeah, there's a few startups in that. Are you guys in that space as well? Or?
Yeah, we are trying. We have obviously the team working on features, because obviously the prop trading companies are requesting a few features which are a bit different than the actual industry. But yeah, we are offering it now.
Okay, that's it. Thank you, everyone. Thanks for the panel.
Thank you.